We're talking today with Anne Marie. She is the head economist with the Calgary Real Estate Board, and we're specifically going to hone in on the tariffs, the uncertainty in the market, talking about the stock market crash last Friday. You know, what sort of turmoil are we currently in? But we're going to try and specifically gear this to the Calgary real estate housing market and maybe look at how things were forecasted to what the uncertainty is, how that is, potentially going to affect, our market here coming into the spring. So thank you so much for joining us today.
Thanks for having me.
Yeah, it's great that you can set this time aside. So with that being said, I've got a lot of questions for you, and I'm sure that there's going to be some spillover. So let's get into it here. The tariffs, and looking at what that kind of did with the stock market last Friday, create some uncertainty, some people hitting the panic button. How do you see the U.S. tariffs impacting the Canadian economy, and specifically the Alberta economy in the near term here, the near quarters?
Well, right now I think the shift has focused a bit because, we know that the uncertainty is there, and that's causing the stock markets to do that. Now, he's imposed tariffs across much broader base than I think anyone thought. It wasn't as targeted as people had thought. Now, when it comes to Canada, a lot of the focus has been on steel, aluminum, autos, not energy. Okay,
Mm-hmm.
so that's the one aspect that I think has sheltered us a bit more so. But the problem is, because this is global in nature, it's having an impact on commodity prices. So now some of the risk in Alberta has not necessarily shifted to the tariffs specific to what's happening in Alberta. It's more shifted to what is this going to do to energy prices, and is it going to stay there, and what does that mean for our largest industry?
Yeah.
So the concern is, if these energy prices stay low, and of course that also came with a rise in supply from OPEC, so kind of got double hit there. If these energy prices stay low and for an extended period of time, well, then that can have an economic impact on Alberta. Right now, it's not necessarily doing anything specific because they're not going to make any adjustments based off what's currently happening. But if this is a state of prolonged lower energy prices, well, that can impact investment, it can impact employment. So those are the key things that have short-term implications, right? And if that happens, well, we'll see that impact spill over on the overall economy. You'll see slower economic activity, and that kind of weighs through. Now, on the flip side of that, one thing to consider is, what happens as we move forward.
Mm-hmm.
Okay, so we're having, elections coming, and there's a lot of discussion over pipeline development, right? That actually can have an offsetting impact, right? So if we actually start to see movement in that, maybe we'll get pipelines developed to get our energy products to different markets, because the problem is right now we're so tied to the U.S.
Yeah.
90% of Alberta's exports go to the U.S. 97% of our energy exports go to the U.S., right? So we don't have any other alternatives, and it's not easy to find those alternatives for our market right now, especially when you're talking about energy. So if we see some shifts where we get more development happening, and maybe we'll get more pipeline access, or maybe we'll see infrastructure builds in that way, that can be a very different scenario for our province. Now, it's not going to help with the short-term sort of impact of that adjustment, but at least that can help offset us and put us in a better position when we think more longer term. So, but right now, what we're seeing weigh on the market is the uncertainty. Just that we don't know how this is going to impact it. Not just our flows, but international flows. Because we're so reliant on the U.S., if their economy starts to suffer, we'll feel that too.
Mm-hmm.
So I think that's really all those things that are kind of at play right now. And again, much of that uncertainty originally was focused on what are they going to do to Canada? Well, now it's not just Canada. We're talking about global implications. So again, that shift has moved away from just the tariffs specifically on us, as opposed to what are the overall economic factors impacting global markets. So that's sort of the thought process right now. One thing to remember, from where Canada was impacted the most, that tends to impact Eastern Canada, Ontario and Quebec, far more than it would impact us.
Sure.
But as a whole nation, you feel that impact, right? And then also, what does that do to interest rates? How does that impact inflation? So those are all those things that are really still quite uncertain, and things that, when it comes to the interest rate environment, tariffs can have inflationary pressure, But at the same time, if your economy's slowing, then that has the opposite effect. So it comes down to which effect will outbalance that. Currently, the expectation is that rates will still start to come off a bit, but much of that will depend on how does inflation look as we move forward.
Yeah, so next week they're talking about another rate or announcement again, and you're thinking that there still is going to be some easing on interest rates then?
That's the current expectation.
Okay.
So, now how much are they willing to push? Maybe not as much as before. It's really hard to say. Because inflation has been, it's kind of come back to more normal levels. But again, it's the uncertainty, right? So, and the concern over the economic numbers is also at play. But the Bank of Canada, again, their main focus is on inflation. So.
Yeah. Going back to that thing about, piggybacking on the U.S.'s economy and, if there's slowdown, what happening, it's almost like an ocean liner, right? By the time they put the brakes on, they say it takes over a mile to slow down and come to a halt. With that being said, roughly how long would it normally take before uncertainty is surpassed by actuality, whether or not, what direction we go in? Is that 6 months? Because I certainly see, in our housing market, people always ask me, well, what do you think the market's going to be doing in September? And I'm always saying to them, well, where's my crystal ball, right?
Yeah.
And, you and I had done our undergrad together, and, you went in the direction of, studying behind the scenes, and, I've basically gone into the front lines, and, it's kind of what I see. And I've always noticed that, with the building industry, they could be motoring right along, and it's another 6 months before they see that slowdown, so to speak, or the laborers do, right? Their last paycheck and what have you, as we saw in that market of 08 and 2015, we were seeing that slowdown in 2014, and it wasn't until, the following year that, that housing industry had slowed down. So is it safe to assume that it generally takes 6 months, or is there a rule of thumb, or not necessarily?
Well, it does, and again, depending on what the impact is. So first thing to consider when it comes to housing, usually the key factors are employment, population growth, right? Now, we have been benefiting from strong population growth that continues to, and all those people who have come here, that continues to support your market to a certain extent.
Sure.
Now, when we think about the real impacts, first thing I look for is when does it start to impact employment? And what type of employment is being impacted. So when I think about our housing market, that's what I'm looking for. Am I seeing shifts in jobs? So far, the employment numbers have actually still looked fairly good. We have had some adjustments over the past month, but generally, like on a seasonally adjusted basis, our employment numbers are very strong. Unemployment rates have actually kind of come off a bit from where we were here. So that's something to note. So when I start to see impacts on employment, it'll be what type of employment's impacted. Then it's does that persist? So that impact on housing, there isn't no real rule of thumb. It depends on what types of jobs are being lost, where we're seeing it. It could be 6 months, it could be 8 months, it could be a year, depending on what is lost, and that's really the thing I'm looking for. So persistence in that. When we think back to the last time we had a major correction, so again, that 2014 timeframe, which was impacted by the energy sector, those energy prices kind of came down, midway through 2014. We didn't really see the impact on jobs happen until at least another year, right? So then we saw those jobs happen, and then we start to see it play out in the housing market. So again, there's the uncertainty part that has short-term impacts, but for longer term, it's one about those fundamentals, right? So if we start to see some significant job loss in our key industries, then I would expect to see that really not necessarily play out this year, but it might be something more we see into next year. And again, part of it is also where you start from. Another key factor is, and that's why I say it's no hard number, because we're starting from a place of low inventory. So all of this is happening when our market just came out of like persistent seller market conditions for 3-4 years. We've had no supply in our market. So we're not starting from a place of too much supply.
Yeah.
So that lessens the impact on the housing market, because we still have a ways to go before we hit balanced conditions. Now, so that's another factor to consider, right? And even if we start to see some of the uncertainty play out on demand, we see some supply levels rise, we are far from a place of being in a market that is oversupplied. And why that matters is that's when it impacts prices. So there are going to be some changes within the market and within different product types and in different price ranges. But before our entire market is oversupplied, we have some time to go, and part of that is just because we've had so much population growth over the past several years. And again, as I said, some of our employment numbers still look okay right now.
So you brought out some really good points there. One on the employment, as from an investment standpoint on, income producing homes, things that, I was always taught to look at, you look at employment, you look at migration, you look at vacancy rates, are those, getting too high, and then, as people transition out of rentals because, the rent versus ownership, it starts looking like a no-brainer, Quick question on the migration. I know that that's certainly slowed down. Are we still seeing migration coming right now?
Well, we have no update on numbers on that. So the only thing I can do is look at sort of our labor force growth. And that number has started to slow.
Right.
Now, we have to remember this year, those numbers are expected to slow anyways, because federal targets of international migration have now been reduced.
Yeah.
So we are, like, most of our growth was because we had a significant amount of international migrants that impacted our rental markets. Now that number is drastically reduced, right? So that's already expected to slow our growth. What is really the unknown is what that interprovincial migration number will look like. Okay, so that was already expected to slow this year. We haven't seen any new numbers yet. I would suspect that it's going to be lower for sure.
Yep.
And I think even with uncertainty, that tends to prevent any movement to a certain extent. So I wouldn't be surprised to see some of those numbers come off anyways. We still have to account for all the people that came before, and I think what we're starting to see is that reflection in the rental market. Okay? We're already seeing much higher vacancy rates than what we had. Now, some of that is because of all the construction we've also had. So you got to layer in that construction factor.
Yeah.
So where we're seeing the biggest challenges is right now is in rental, right? We're seeing much higher vacancies, taking that pressure off rental rates. Asking rates have definitely come down from where they were, and we're seeing more supply come on. Part of that has been incentive programs to build apartment style units for rent, right? So all of that is going to impact that segment of the market first. Now that does two things. One, for renters, that transfer to ownership. Well, if you're not facing significant gains in rental rates, you might not be as pushed to go into ownership as maybe as what we saw over the past year or two when rates were increasing at double-digit levels for rents. That really pushed people to go into ownership. Now, as investors at the same time, if you have a higher vacancy rate and your rental rates aren't increasing as much, that also can slow investment activity. So I think that we're going to start to see a bit of that start to play out this year. And when we think about the impact on the market, you'll likely see that more in the condo apartment sector.
We're seeing it for sure right now.
Yeah, and I think that we're already seeing that. I mean, and to a certain extent, there was already expected to be some level of adjustment just because you have more supply. Now, the only thing that really can offset that is if you have strong population growth.
If you've watched thus far, you're probably aware that the camera is shut off, and I really apologize because the video was about 25 minutes and there were some really good nuggets there with the head economist there for CREB. With that being said, if you would like to know about how buyers can take advantage in this uncertainty, as well as sellers and what they need to do when pricing property, by all means, give me a call, 403-809-3523. Happy to fill you in on the remainder of the minutes there. And if you like, I'm putting out a video tomorrow with regards to the market update for the first 9 days here in Calgary. Enjoy the rest of the week. Cheers.